All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market is about 20 minutes from opening, and want to do something a little bit different here in the pre-market. Not just talk about kind of the way the day is setting up, but go and take a look at the way the market is set up here on the week. And, some of the changes from last week, because last week we went out, we looked at, kind of how the market unfolded, a lot of these kind of breakdowns out there, and that if, they continued this week, that'd be a pretty bearish sign. A lot of them aren't continuing, and so I want to go out and take a look at those here with you this morning. But before we do that, S&P futures up about 4.5 points. You can see they've fallen about 10 points from their highs over the last 30 minutes. Right? They've fallen about 10 points here. I don't have my news feed up to see if there's anything glaring right on the surface just yet, but I know when we had Nucor come out and revise their earnings guidance, and they lowered their earnings guidance, so that weighed on it just a little bit. And we also had the Empire State Manufacturing Index, which fell to about 3.7, which was a 2-year low. And, that's one of the regional manufacturing indexes. That region is New York, Empire State. That's a 2-year low on that number. And so, continuing to see a mixed bag out of these regional manufacturing indexes, but they're definitely on the lower side than what they have been recently here. So those are going on this morning. We're also seeing oil fall off. Oil down about 1.5%. It was interesting. A lot of stuff came out over the last, since the oil breakout, about OPEC and OPEC. Basically, are they going to be able to continue with their production cuts? And we talked about this kind of mini breakout here in oil above this kind of 58 level, and it's held for about 2 days, right? I wasn't willing to buy it. I am willing to sell it if the breakout doesn't hold. We're seeing the breakout get sold off here back to, what was the resistance level. So very interested in that action here today and how that plays out, and especially how that plays out in terms of stocks like Halliburton, in terms of stocks like Anadarko, Conoco, looking at those for some entry activity here. So those are on my radar a little bit this morning. I find it very interesting that we see tech higher, or the Qs higher this morning. And we have so many of the big names actually trading in the red. So you can see the Qs, they're set for a little bit of an upside here this morning. But when you look at Adobe trading lower, you look at Oracle trading lower, you look at Netflix. Netflix is trading slightly higher here. Oracle, Adobe, Tesla trading lower here. Who else is trading lower? I had my list. It's not with me right here. Let's see if I can grab it. I don't have it on my fingertips here, but anyway, there were several major, Adobe and Oracle are the two major ones. There were a few other big tech names, that are moving on lower here this morning, but tech moving on higher. There is some negative commentary when it comes to Facebook, but there's also some positive commentary there. We are also seeing. Sorry about this. I thought I had my notes right here, but I don't. So I'm going off my memory a little bit. We also see Broadcom, with some activity here today, but nothing too major. I want to go back to the energy sector because there was a downgrade here with 3 of the big oil service names, and I'm trying to grab those here because those are not coming to my memory. All right, we have Schlumberger, Helmerich Paint, and Precision Drilling. So three of these kind of oil service companies, SLB. Now these are the same group as Halliburton, but a little bit different companies. HP, Helmerich Paint, and PDS basically said, "Hey, we're trying to find some growth, and we just really can't find much growth within the space. That the space is pretty growthless, and there are a lot of names in the space. It's a crowded space indeed. There is some talk that we're going to see some drilling activity pick up here in the U.S. With oil prices up about 20% on the year, which I find to be a very interesting commentary. And I don't know if you saw it yesterday from one of the big oil traders, talking about oil on the year being up 20% and basically saying this is going to drive a lot more production out there. Well, you know what? When companies are making decisions, they're not just looking at a 2-month period and going, "Ooh, oil's up 20% in the last 3 months. Let's make a decision." When you look at what the real price of oil is right now, it's significantly lower than what it has been over time. Yes, there was this flash lower and this pop higher. But that doesn't change, production schedules or even the mindset on production schedules, even though, you can write a very nice note saying, "Oh, oil's up 20% this year." So anyway, we see, we see that happening, and I do, obviously, where I stand when it comes to some of these oil companies. I do think they are shortable. I haven't found an entry point here just yet, here this week, but overall, that's what I am looking at, and will be looking for as we go forward here. Now, last week we talked about some of these weekly charts that we're seeing some breakdown in them, where they were breaking down below the 7-week moving average, and it wasn't all stocks, but let's just go take some of these names, and I'm going to put up a weekly chart here, and we're just going to get rid of all the indicators and just put this kind of simple 7-week moving average on here, and kind of take a look at this. Here we go, 7, maybe. There we go. We'll come in here to a weekly. All right. 7-week moving average. Now, this is Microsoft, and you'll notice that, it has times where it's above and below the 7-week moving average. This was one of the few stocks last week that didn't break below the 7-week moving average. And we talked that, hey, the ones that haven't broken below the 7-week moving average, they have a greater chance of holding up. And we've seen that, with things like Microsoft here this week. But what we did see last week were a lot of stocks that broke below their 7-week moving average. Caterpillar, for instance, right? Last week broke below its 7-week moving average. This week it's up with the market, but not nearly as much. Not nearly as much. If we look at the overall market, the little bit of a rebound that we saw Friday afternoon kept it from closing below its 7-week moving average. And then this week, completely erasing that action, right? Completely erasing the downside action from last week. And we have this all over the place, where a lot of these big bad red candles from last week on these weekly charts are getting erased here this week. Now, what's the significance? Well, if we come and we look in past history, right, we're going to see a very mixed bag. We'll see, times where, all right, there's this breakdown right here. Then there's this snapback, and then the next week is another breakdown. Here we have a breakdown, the next week a snapback, the next 2 weeks a breakdown. Here we have a breakdown, the next week a snapback, and rally on. Here we have a breakdown, next week a snapback, rally on. It's a very mixed bag, and as we go and look at it historically, right back here, 2014, same thing, breakdown, boom, go, right? It's one of those that, that I don't look at the past data and say, well, the tendency is this, so this is most likely going to happen. It's a very mixed bag. But what's not a mixed bag is that if it does break back down, it's not a mixed bag about further selling. If the lows from where the market opened on Monday, if those break, that's a very significant break. That's a very significant level for the markets. And yes, that's now about 60 points away, right? But in this market, when we've been talking about some of the action, 60 points isn't what 60 points was 5 years ago, right? The market is significantly higher today than what it's been. But those lows from this week, that Monday gap, that's going to be a very significant level as we go forward, not just for the S&P, but for the market itself. And I look at this market a little more bearishly than bullishly, right? We had stocks like Halliburton last week break below the 7-week moving average, snapping back a little bit here this week. There are a lot of this type of picture out there. And it's one where you can say, well, let's go short Microsoft. Let's go short the ones that are above the 7-week. They're going to be a little more dangerous. They're going to be the ones that, snap back the hardest. Yep, some stocks like an Apple, it's going to get 3 upgrades in 3 days and get another upgrade today. And, it's going to fly, right? Analysts are going to take it and really run with it. But, these stocks that this week are not able to make it back above the 7-week moving average, those are going to be ones that are going to lag going forward, barring some major change in the rhetoric or the the analyst, the earnings, or the overall market condition. The ones that haven't broken down, you just look at this week's lows. If they do, now their stripes are changed. But for now, their stripes are definitely bullish. One of those for me is a Nike. Nike, I think, from a technical standpoint, it's just gone a little too far. Had that kind of red candle last week, didn't break below the 7-week, but it's the same type of story, same type of situation. It breaks this week's lows. That's going to start to tell a very different story in terms of the price direction going forward. And when we kind of come into the end of this week and look at kind of the way things have shaped up, and yes, March is historically a very bullish month, right? But it's had a bigger sell-off than any other month so far this year. The Monday action, that Monday gap, those levels, I think if you're looking at it being a buyer, you're looking at saying, I want to go and buy. For instance, you want to go buy a Caterpillar. Fine. Where do you set your stop? Well, the Monday's open price, I think, is is what this week is telling us, is what this week is showing us. We had U.S. President Trump a report yesterday that basically said that he expects that the Dow Jones Industrial Average, will rally 2,000 points on a trade deal. Okay? That's, one man's opinion, but, we've talked about, the incentives. He has every incentive for the stock market to be at new highs when he runs for re-election. Whatever you want to make of, his politics and all of that, Democrat, Republican, no matter. You look at the incentive. The incentive is for, it to push the market higher. The Fed, the incentive is to push the market higher. And so we're seeing, some of those incentives, playing out after the little bit of a dip. The thing is that if the market really starts to dip and, really starts to kind of ignore that type of rhetoric, then, things are going down in a big, big way. But so far, the market's paid a little bit of attention. But keep an eye on Monday's gap lows. I don't think it matters for the Dow, just simply because of Boeing. Boeing was such a big weight on the Dow here this week that it kind of skews the index just a little bit, but the bigger indexes, the IWM, the Qs, the SPY, a lot more significant with that low here from Monday. All right. So anyway, that's that's kind of how I'm looking at looking at what this week is telling us. We don't see a big bad major change in the market internals. Even though the market's gone to a new high, we haven't seen the market internals turn bullish. They've stayed neutral here. They went from bearish, they ticked up to neutral earlier this week, and they're still neutral. This hasn't been one of those where, every day the bullish percent index is climbing or the volume is, changing in the bull's favor in a big way. The metrics are yes, some of the short-term metrics have shifted. But, the metrics that the bulls or the bears took a little bit or at least went to neutral last week, most of those aren't changing on this rally. I find that really interesting. And generally, it doesn't mean anything for the moment, but it does mean something if there is another breakdown, and it's significantly more negative if there is another breakdown. And that's what I'm expecting that we will see. The when of that is, still up in the air, and you've seen for the challenge, I'm not willing to be too aggressive. Yesterday I did have a put signal on U.S. Steel. I decided not to take it. Now it is trading lower here in the pre-market as Nucor kind of released some earnings guidance and is trading on down. I'll see if I get a chance to enter U.S. Steel here this morning when I hop off here. But, I'm holding Home Depot puts. Home Depot's probably going to gap up a little bit here this morning and probably put me about even on my trade. At least the stock is going to be about the same spot that it was when I entered. Yeah, it'll be about the same spot. We'll see the option probably away, or the option will probably be down just a little bit, for the 2-day time decay and a little bit of IV loss. There was a little bit of IV bump after we got in. Or after I got in, and whoever else got in, but there was a little bit IV bump. We are going to get a little bit of a bounce here this morning, but I will most likely be holding this into the weekend. Again, we'll see what the price action dictates and what we see with the overall price action, not just with Home Depot, but with other things out there. But until we see a mass market break, I'm probably not going to be too aggressive, here on the downside, because I do want to be aggressive when that, if and when, I guess it's the if is a matter of when that happens. Thanks for hopping on. Have yourselves a fantastic day, and I'll jump on in about 3-4 hours. We'll do a little bit of a challenge summary, talk about some of the day's action and the different trades here from the week, and we'll talk to you then. Take care.